Good day, candidates. Welcome to this tutorial. We're going to be looking at this grade 12 paper 1 November 2021 that was written, and today we're going to be looking at question 2. We're done with financial statements in terms of statement of financial position, statement of comprehensive income. Just revise those because there'll be maximum marks there that are particularly free. So make sure that you make time for that. And let's look at question 2 of 2021 November that was written. Question 2 is about share capital, financial indicators, and cash flow statement. 35 marks, 25 minutes. So there are 3 concepts that they are asking here. 25 minutes is not so much time. We're gonna use the answer sheet that is provided, and we look at the answer sheet here. It is provided question 2, answer sheet 2.1, ordinary share capital note. As guidance, it's so nice. It's so free marks are there, cut and paste. Question 2 is about cutting and pasting. If you understand your format, you're just gonna cut and paste. That's it. And clues are given because also on the question paper itself, on the last page of the question paper, look at that last page of the question paper, look at the formulas are given, clues are given, and that's where you're gonna be using those formulas. Let's look at the question. Before we are carried away, we are gonna be doing question 2, or rather we are doing question 2. Please subscribe to this page and make sure that you follow this page. If you have any question, just follow this page and just type your question and I will respond to you. And if you don't have this question paper, you can download it directly from the link below, or you can go to the page of the Department of Education, or you have it already and you just go to question 2 and let's just revise this curriculum. And remember, these classes are for free, but you are welcome to donate because we must start this school. We must be the movement, guys. Things are falling apart and we must work together, and this is what I can do for you. I don't have anything else, but I have this knowledge that I want to share with you and improve your symbol, and stand a better chance of getting an entrance at the university, stand a better chance of getting a bursary, a scholarship, and all these nice things that comes up with hard work and dedication. And I know that you are dedicated enough to actually do this. Without any further waste of time, let's do this exercise. Information A, list of balances before taking into account all adjustments below. Ordinary share capitals, question marks, because they were asking us about that ordinary share capital. But let's look at the required part before we are carried away. Question 2, we're going to be looking at the required part, because now I'm looking at the wrong question because I was talking too much. But I'm talking too much because I insisted that you subscribe. And if you subscribe, this is the series of 3 examination questions, which is 2020, 2021, and 2022. Both paper 1 and paper 2 will be fully answered. And we will close this with a visual class. I'll be live somewhere in November, maybe first week, somewhere in November. I'll be live for 2 sessions, paper 1 and paper 2. And let's engage, because I'm speaking alone here. I'm at my house, nobody. My kids are at school, and I just take this opportunity to actually assist you. So we will have a visual class and we will engage. If you have particular questions that are exam-based, we are dealing with the exam. Any question that is exam-based, reserve that question, or you can post that question on the link below, or reserve that question for that visual class that will be organized. Okay, let's carry on. I'm just happy for us. So you look at question 2. Required, prepare the ordinary share capital note on 28 Feb 2021. And this information, remember, it relates to Brewer Ltd for the financial year ended 28 Feb 2021. 2.2, calculate the following financial indicators on 28 Feb. Percentage operating expenses on sales, cut and paste, free marks. Dividends per share, cut and paste, free marks. Percentage return on average shareholders equity, free marks. Complete the cash flow statement. You just cut this 18 marks from the question and just you paste it to your answer, and you get your free marks and you pass the exam. But let's look at the methods, let's look at the techniques, let's look at the procedures that we can use to actually quickly answer this question. And when I go to my answer sheet, which I did earlier, is exactly the same as this answer sheet that is given. Let me just increase the font, where you are given, this is the wrong answer sheet actually. Let me look at the correct answer sheet. How did I save it? Let's say cancel, and let's open the new spreadsheet. It looks like I lost. It looks like I didn't save, but I must have saved that document. Let me just double check. Sorry for this. On my knowledge, I did save this document. And guys, now my computer is becoming dirty because of you. Many questions, this is what I prepared. Yes, and this is the solution. Sorry for that, guys. Sometimes these things are becoming confusing, but I'm using we'll talk about that later. But for now, let's look at this, because the purpose of this is to actually answer accounting. So other issues will engage in other channels and other platforms and discuss other issues. But for now, we are discussing an art of recording transactions in a significant manner in terms of money and interpreting the results of trading. That's what we're doing now. So ordinary share capital, this is the given, and this is your answer sheet. And I included everything that is on the answer sheet that will be given to you. Answer sheet will look like this, and it will be given to you. And we are on this concept of know your format, and we're like, okay, dividends per share, what is my formula again? Percentage, operating expenses percentage on sales, what is my... And all those are the questions you are asking. And before you waste any time, you are like, okay, ordinary shares are given, amount 100,000 shares also given. They also gonna speak about repurchase of shares. Let me start here. Repurchase, because I'm repurchase of shares. And it's always like this because I know my format, so I don't want to waste time and I don't want to be confused. So I'm gonna do this quickly, and like, okay, percentage, operating expenses on sales. Maybe you are like, I forgot that one, but I can easily copy that one because it's given at the back of the question. And you look at the back of the question, you are like, okay, they are speaking about operating expenses. You're like, okay, oh, this is the one. Operating expenses over sales. Simple. Operating expenses over sales. Now you find multiplied by 100 over 1. Okay, it's fine. You're happy with that. Dividends per share, you are like dividends. Also, you can check it, dividends declared and paid, or dividends for the year, over number of shares issued. Number of shares issued. You know that it's nice. And then percentage return on average shareholders' equity. You can also check that and say, okay, percentage return on average shareholders' equity. You are like, okay, net income before tax. Net income before tax. Net income before tax plus interest on loan. That's how it is, plus interest on loan. Over average what? You check average shareholders equity plus average non-current as liabilities. Average shareholders equity equity plus average non-current liabilities. Non-current liabilities. And this is how it is there. It's given like this, and you must be happy. Multiplied by 100 over 1, of course. I don't have space, so multiplied by 100. So I'm showing you this because sometimes they don't require you to show them this, but because I'm facilitating and making sure that you get all maximum marks, and then you go to your cash flow statement, and also on cash flow statement they said, I see great shaded areas. Obviously they will say avoid these areas. Now you know that cash flow from operating cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. You must know your format in terms of that. Now I know that, okay, cash flow from cash generated from operations, interest paid. I know that taxation paid. I know that taxation paid. I know that after that transaction is dividends paid. And you are happy. You are like, okay, cash flow from investing activities consists of additions and disposals, anything that has to do with property, plant, and equipment, anything that has to do with fixed assets. So, and the amount was given, so everything was calculated for us. So, cash flow from share financing activities, cash flow from financing activities has to do with shares, has to do with non-current liabilities. Shares, how so? Shares issued, and then that repayment, or rather that repurchase of shares, and we have the last transaction, which will be based on the loan repayment of loan. Obviously, when we take a loan, it must be repaid. So year in, year out, it will reduce. But we will find out more about this. You're done with that. Now you go to the questions. You're like, okay. Time is not on my side. You like go back to page 6. And on page 6, you're like, okay, information. And let's work together here. Just look at this and let's work together here. 1 March 2022, 800,000 in issue. 30 June 2020, 100,000 new shares issued. And that information is recorded on our answer sheet. We are doing 2.1 on our answer sheet. We look at that 800,000, 100,000. Now, 800,000, we need to know how much is the price of those shares, and is the beginning of the year. It becomes simple if you look at the given information. Comparative figures tells us that ordinary share capital was 6.4 million. It was 6.4 million. It tells us that, and we are happy. Ordinary shares issued, we don't know that information. We go back to this and say, okay, on 1 January 2021, 30,000 shares repurchased at 120, more than the average share price. This is simple because now what is happening here is they repurchased shares of 30,000. And obviously, repurchase of shares is always a minus. And that repurchase of shares, 30,000, at a price of how much? At a price of 120, more than the average share price. So it can't be like that. We must look at the share price and say, okay, the share price in this case, I'm given this information. So I know that at the end of the day, the total here would be 800,000 plus 100,000 is 900,000 plus minus 30,000 is 870,000. So that is the total here, to say 870,000. And that 870,000 is an indication, and there is the balance at the year end. And you can say, okay, 870,000, 73 95 million divide by, because it's that 7395 million, divide by the number of issued shares, 870,000, and it's equals to, let's open our calculator and see what we can get. Calculator, you can also open your calculator. 7395 million divide by 870,000. What is the price there? The price is 8 rand 50. The price is 8 rand 50. So now this should be multiplied by 8.5, which is that 8 rand 50. 30,000 multiplied by 8 rand 50, which is 30,000, and you get 255,000. And this is 255,000. Remember, it's always a minus. And remember, we always solve this thing. I've noticed it's like you solve simultaneously. This is x plus y is equals to z. So it's gonna be, when I use my formula, you can use your calculator. You take the balance at the year end minus the balance at the beginning of the year, which is in my case is C2, and then minus again the repayment of shares. You're gonna get the new shares that were issued, and these are the shares that were issued, and then you get your 6 marks. You're happy with that. But now, because you also required to do the statement of financial of cash flow statement, and you are happy that there were shares issued of 1 to 50 million. You see, if this amount is wrong and if you are not sure about your work, you will lose a lot of marks, because these marks work together. It's like a train, you know. So one amount is used for different. And look at the repurchase of shares here. And the repurchase of shares is that amount that we got on top. Let's look at that amount of repurchase of shares. How much was the shares repurchased? 250. And we also calculated this amount on our own, 255,000. And on the cash flow statement, let's rather not waste time, 255,000, and record that as well. But that 255,000 must take into account that 30,000 plus, let's do this, 255,000 plus, there was 30,000 multiplied by, let's look at the percentage, 1 rand 20. 1 rand 20. So that because it's a cash flow statement, actual cash flow must be recorded as and when it took place. 255,000. Now you take this 30,000 multiplied by 1,2, because you don't want to waste time, plus 255,000, and then you get your 291,000, and it's always a minus 291,000. Now you're like, okay, there's also repayment of loan, but you are not there. You wanted to answer what is given. Answer as you get. So what is the next question? The next question in terms of this answer sheet is calculate operating expenses, percentage of operating expenses. This is free marks. You look at if you have any operating expenses, which is 1,458,600. 1,458,600 divide by, and over what? Over sales. You look at sales. 7,293,000. 7,293,000 multiplied by 100, and then you get your answer. What is our answer here? Very, very simple, very, very quick. 1 for free marks. You cut and paste on things like this, you see. But it doesn't mean you must not understand your story. Understand your story. Practice as much as you can. Remember, this is the last exam. So you must give us the best highlight of yourself, which is equals to 20%. Okay, comma 2. Okay, this is a spreadsheet, ne? Yeah, so that answer that you get is the one that you must record. Now, dividends declared and paid over number of shares issued. Let's look at the dividends. This one, it can be free mark. Interim dividend was paid on 30 September, 162,000. 162,000 multiplied by, and what is the dividends also? A final dividend of 22 cents. Now they give us an invest. They give us an interimly, so they paid an amount. Final, so they paid cents. Now you must understand how to get cents, how to get amount. So look at the final dividend of 22 cents per share was paid. And this amount of final dividends or ordinary dividends, you look at now, how much was the total of the shares there? It was, okay, we have now dividends per share, ordinary dividends paid and declared. You look at the dividends and the information speaks here. Interim dividend of 162,000 was paid on 30 September, 162,000. These are the dividends that was paid interim. And we want to know the dividends for the year. We want to know the dividends for the year. How much was the final dividend? The final dividend of 22 cents per share was paid. And if you don't know the number of shares issued, it becomes the problem, and that you would have got on the share capital account, where you have now 870,000. Just to get this amount is going to be 870,000. 870,000 multiplied by 22 cents. How much when you get 870,000 multiplied by 22 cents? 870,000 multiplied by 22 cents is divided by 100 all the time. So it's 191,400. So that 191,400. 191,400. So the total here is this plus this is equals to the total dividends for the year. Now we have 22 cents. We have this. We want to determine the dividend per share. In terms of 162,000 multiplied by, these shares actually were repurchased in January. So earlier it was 900,000. It was 900,000, as you can see. Let's look at on this. It was before the repurchase is 800,000 plus 100,000, which is 900,000 divided by 900,000. But at the end of the year here, these shares, that amount reduced to how much? To 870,000. And when we do that, we are able to get how much were the shares dividends declared per year. 162,000. You can use your calculator. And this concept is very deep because students lose a lot of marks because they don't want to consider the repurchase of shares, which is equals to 18 cents, not 18. They don't want to consider the repurchase of shares, and it becomes a problem. Now we said the 191. So that 191,000 is because of this information that is given here. So you can use your calculator, use your common sense, and calculate this amount. And to calculate this amount, we know that is 191,400 divided by 870,000. You see, because now the repurchase reduced this amount and is not 22. And when you add them together, 0.22 plus 0.18, which is equals to this plus the other amount which we got is equals to, okay, but I can see that is 0.40 without any further waste of time. Return on average shareholders' equity. Net profit before tax. Average shareholders' equity, you have net profit before tax plus interest. But because now this we can say net profit after tax. After tax over average, you can do that. So net profit after tax is, let's look at our net profit after tax. Our net profit after tax is 985,500. 985,500 divided by average shareholders' equity plus 6,450,000. And then that must be divided by 2 so that it indicates that it is an average. And when you use your calculator there, let's add this together. 8038,100 plus 6,450 million is equals to, divide by 2 is equals to 7244,050. 7244,050. Maybe you can show this amount because they like us to show amounts, and if you calculate this together now, you get that the numerator is 985,500 divided by denominator, which is what you just got now, 7244,050, and then you multiply it by that 100, and then you get that percentage that is required, which is 13.6%. 13.6%. You leave it like that. Cash flow statement now. Interest paid, tax paid, dividends paid. And tax paid and dividends paid is the note to the cash flow statement. And that note is an unpaid amount beginning of year, amount recorded on comprehensive income, less amount paid at the end of the year. It's always like that, and we're not going to record that. We're just going to say tax paid, unpaid amount at the beginning of the year. You look at your question and you check what is the tax there. Unpaid amount beginning of the year, here's 35,900. There must always be the credit balances. 35,900 plus an amount recorded on the income statement. And you look at the income statement, we don't have the amount for tax, but we have the amount for profit before tax, profit after tax. Obviously, the difference is the taxation. And the profit before tax was 1,350 million. The profit after tax was 985,500. It tells me that if I subtract them together, I get 364,500. 364. And you see, it was not easy to get it. It's not like it just wants you to understand your work, to understand your work basically. And minus unpaid amount end of year. You look at the end. Surprisingly, they are saying it's a debit. So if it's a debit, we're not gonna minus it. We're gonna plus it. Plus how much? Plus 29,100. You're done with that. And then you record your amount. What is your amount? 35,900 plus 364,500 plus 29,100. And same procedure with dividends, which is 429,500. Same procedure with dividends, same thing. Unpaid amount beginning of the year, let's look at it. Dividends, here it is, 115,300. 115,300 plus amount recorded on statement of comprehensive income, which is, we calculated that amount for the year dividends. For the year dividends, interim was 162,000. And final plus 191,400. Some of the amounts are not they're just given. 191,400, and you get 353,400 plus 353,400 minus an amount recorded as a comparative figure, just like we started with the balance beginning. End of year was 191,400. 191,400, and then you just do the mercy of that calculation, and it's 115,300 plus 353,400 minus 191,400, and you are happy with 277,300. And don't forget that these are minuses. You must put them on brackets. Don't forget that these are minuses. Just put them on brackets. And then basically that's how you do it. Interest paid, dividends paid, and you don't have to do any other stuff because that amount already is given, and you go back. This amount is given for investing activities. You look at your financing activities. You like, okay, repayment of loan. What about the loan? Let's look at the loan. Loan Sharks Bank, 2.2 million, 1,650 million. 2.2 million minus 1,650 million, because it reduced. It shows us that something was repaid, and if it was repaid, it's also a minus. 2.2 million minus 1,650 million, which is equals to 550,000. And then what you do here is, okay, I have my cash flow from financing activities, which is equals to this plus this amount plus this amount, and then you get your total. That's your total, and you're happy with that. Now, to get the net change in cash and cash equivalent, it becomes simple, because it's this amount plus this amount plus cash flow from financing activities, and you get that as a net change in cash and cash equivalents. And then cash and cash equivalent beginning of the year, we look at what is happening. Is beginning of the year we have petty cash and cash float of 20,000, as well as bank overdraft of 95,200. So it tells us that is minus 95,200, which is bank overdraft, plus that 20,000. So obviously it gives us a minus of 75,200, because if you minus that 20,000, it gives us that. And then the cash and cash equivalents at the year end is this, and then you must minus that amount on your calculator, and then you get your cash and cash equivalent. And cash equivalent, so is that net cash and cash equivalent. This is basically how you get your cash and cash equivalent at year end. And everything you have answered, and you get your maximum marks. I hope to see you in the next tutorial.